Hi, good morning, everyone. I'm hoping you guys can hear me out there. I'm Rachael Katz with Key to Debt Free. I'm stepping in for Miss Hannah Kessler today as she is out at her best girlfriend's wedding this weekend. Hoping they're having a wonderful time. And congratulations to Sadie and Jimmy on your wedding day today, or tomorrow, actually, I think it is. So again, so happy to be here hosting Money Mornings for Hannah Kessler today. I'm going to be sharing a little bit about my story, how I met Brent and Hannah Kessler, and how I made my journey into the IBC family and started my own two policies, my first two policies rather, for my two boys. So what I'm going to do, I'm just talk a little bit about how I met Brent. I actually met Brent back in 2018 at a conference down in Dallas, Texas. He had come out to share the infinite banking concept and the money multiplier. It was the first time I'd ever heard about it. I had my life license and was working in the IUL space and term space, looking to kind of understand more about life insurance during that time. When I met Brent and got introduced to the IBC policy, it definitely piqued my interest, as I had not heard about any other type of insurance product that had all of these amazing benefits that the IBC policy offers, particularly the access to our money, right? Having the control of getting that money out whenever I needed it, while also it continuously growing uninterrupted capitalized interest. That really, really intrigued me, and I really wanted to see how that all worked. I didn't do anything the first year that I met them. I actually was invited to Brent's home in January of 2020, just before COVID. So I flew out to Florida and met with them, did their conference there, and that's when I had decided I wanted to get started. I was not making a lot of income at that time. Being a single mom of two boys, I didn't have a lot of income. So I was trying to figure out what was going to be the best option for me to start a policy. Since I had already had some term insurance, it was best that I actually went ahead and started the two policies on my boys, since that was something that was more affordable at that time. So I did. I started two policies, one on my son Jordan and one on my son Jalen. Just putting $250 in a month. And that was back, I believe, in 2020. And so now today I'd like to share with you guys those in-force policies today and show how much growth has happened thanks to the capitalized interest in this policy. And the fact that I've been able to borrow money out and use it for their necessities over these last few years, with it still growing. And this was the first time that I've looked at these policies in a while. So it's pretty exciting to see how well they've done with just a small little deposits, the $250 a month. So let me share with you guys the screen. One moment. All right, let's see here. Okay, let's see what we got up here. All right. Hopefully you guys can see my screen in just a moment. Let's see, actually, let me do this one instead. We'll start with Jordan. All right, sorry, one second here. No, it's the one Jalen, just a moment. Let's remove that one and we'll go back. Okay, I think I got it now. There we go. All righty. At the stage, here we go, guys. Okay, so hopefully you can see my screen, and this policy that I just pulled up, you can see that it says it is the enforced illustration. So that's the current illustration that is being, here we go. Okay. So Jordan's my son. He is now 23 years old. I started this policy when he was 17, $254 a month. So let's scroll down. We usually go on One America policies. We'll look at page 10 or 11 to see the growth. Let's take a look here. All right, here we go. Here is, this one actually is on page 12 this time. So between 10 to 12. Okay. So here, this is the 7th year of our policy with Jordan. He's now, well, he's 23, so he's in the 6th year. He'll be 24. And you can see what we're going to pay attention mainly is our contract premium, which is $3,000 a month. Excuse me, $3,000 a year, our annual. And then I'll look at our total net cash value. So because I started these policies when they were relatively younger, and small amounts of monthly premium, the policy took some years for it to catch up to being able to flow in 100% dollar for dollar. However, I have been able to use a lot of the loans from these policies over the last couple of years. The first few years, I didn't use the policy at all. In fact, I took no loans from the policy, which allowed them to grow. And I actually wish I would have started to take the loans earlier. Had I known better, I would have been able to, maximize the performance in the policies those first few years as well. But it's okay, no harm, no foul. There's still amazing growth in these, and I look forward to sharing that now. So let's take a look here. Keep getting out of there one moment. There we go. So year 7, actually year 8 is where it really shows the most. So year 8, I flow in $3,000 a year. And if we go over to the end year of the total net cash value in year 8, you can see that it says $19,319. So I flow in $3,000 and it grew about $3,036. So at this point, this is when the break-even amount, the break-even year is. So for every dollar I'm flowing in, I'm able to pull a full dollar out. And you see, as this continues to grow, the next year, year 9, it's up now from 19.3 to 22.4, and then growing from there on out. I wanted to also mention, I took out $10,000 last year from each of my boys' policies. So if I had decided to put that $10,000 back in, which I plan to do, this total net cash value would be increased $10,000. Including each one of these consecutive years thereafter. So the plan is, yes, I'm using that $10,000 now to pay for expenses, take care of things for the kids. But as I'm earning more money and putting them back in, I will refund this back up here so they have that monies to use later in life. When Jordan's policy, let me just look back at my notes here. Yeah, you can see at year 13, when he's 30 years old, that's where we're flowing in $3,000. He's at now 38,843. And then down by age 38, I want to show you, this is where the premium actually reduces. So for $3,000 a year, we're going to drop down by age 38 to only $1,300 a year. Let's look at the cash growth there. Total net cash value, $72,662. From $688.86. That is almost what, about $4,000 increase. So for about every dollar I'm flowing in, I'm getting $4 in return. This is the power of capitalized interest over time and being able to leverage this policy through loans and paying yourself back with interest. So as I said, in 38 years old, if I put that other $10,000 that I borrowed in, we're looking at a close to $82,662 that my son will have access to. Maybe he wants to put a down payment on a home. Maybe he's looking to get married. Whatever the situation is, he now has this funding to pull out and use for whatever he wants. So this was a really nice policy that was built. Thank you to Brent and to the Kesslers for creating this policy for my son. I didn't know what I was getting into initially. I just took a leap of faith and hoped that this was what it was. And it certainly has panned out to be that way. And I'm so grateful to them for being able to introduce this to me and getting started for my children, because now I've set them up with at least some type of nest egg, no matter what they've decided to do. See, Jordan decided not to go to college, which is fine. No student loans to have to worry about. However, he's working, he's learning our business here. He's just starting out in his career, but it's nice that he has a little nest egg here to cover expenses in the things that he needs until he still capitalizes on his career and builds it out. Okay, let me share with you now my younger son, Jalen. So Jalen is now 16. We started his policy, I believe he was 9 or 10 years old. So his interest capitalization and policy is really nice because we started him so young, and he's had multiple years for capitalization. He's 16 now, so in the next couple of years, he's going to have a nice amount of money to go to college with, maybe buy a car, or even start a business if that's something he's interested in doing. So let me jump into there real quick. 1 second. I'll stop sharing this screen and let me get his policy up. Okay, it's Jalen. All right. Let me share. Okay. All right, here we go. Same thing, enforce illustration. This is what's current for my son, Jalen. And let's go down to page, let's see where it is. So same difference here. You see his monthly premium of $254. Same amount that I was giving Jordan, but they're 7 years difference. So we'll see a significant difference in not only death benefit coverage, but also the cash value when it breaks even. All right, let me get down to page 10 or 11. Let's see. All right, actually, this one is on page 12 as well. Okay. So same here. We're seeing the flow through break even amount around year 8. I'm flowing in 3,000 here. Let me get this out of the way. Sorry, here we go. There we go. Okay, here we go. 3,000 in. His total net cash value was 17,637, and then jumps to 29,22. So that is a $285 increase over the dollar that we put in. So we're putting in $1, and we're getting about $1, $1.50, $1.20 after out of there. What was the one? Let me go to year. Okay, so for him, we're paying our PUA until age 30. So here's his PUA. Oops, my light just pulled off. Excuse me. There we go. PUA. Okay, so his premium drops down at age 30 from $3,000 a month to $1,200 a month. A year. I'm sorry, guys. Annual. $1,200 annual. We can see here that his every dollar flowed in. We go over to the cash value side. Sorry, guys. Here we go. 30 cash value side. Total net $76,760. So right there by the time Jalen's 30 years old, he's going to be flowing in $1, and he's going to be receiving $4 out. I also took $10,000 from his policy to pay for his expenses this last year. So if I inject that $10,000 back in, that means he'd have about $86,000 to go ahead and do whatever he wanted to at age 30. Same thing. Maybe he wants to get married. Maybe he's starting a business. Maybe he wants to put whatever it is, that's money that he is able to use freely, tax-free, and without having to necessarily pay that back right away. I'm sure they're going to want me to put back that $10,000. I will. Over time, kids, over time. So again, the power of time, guys, in these policies is what's important. It's not how much you start with. It's just getting started. I didn't have much to start with. And the time is going to go by no matter what. 6-7 years went by just like that, it feels like. And for me, flowing in $3,000 a year to be able to have net cash value and access to over that amount each year was absolutely the right thing to do, and shows the power of these policies the moment you get started. So yes, the younger you are getting into these, the better, obviously, just because of time and cost of insurance. But just getting started, period, is the most important part of these policies, because we talk about this being, the and asset, this tool that you're going to use after you get paid, flowing into and then remove from to go and deploy those dollars wherever it is, whether it's paying off debt, going to school, buying a car, starting a business. That's entirely up to you. And the fact that there's so many infinite possibilities. Let's say you're using it initially to pay off debt. Well, once you're out of debt, all of that money you were paying out to other creditors with interest, you now can flow right back into your own banks. Now you've truly become your own banker. So I was finally able to start my own policy last year. I was not in a position to start a policy that I felt would personally benefit me and the goals that I had with my money. After a couple great years of work and career, I was able to save up enough money that I felt comfortable enough to put into a policy that I thought would be able to accomplish a lot of the goals that I wanted in my business expansion, as well as my investments. So I'm going to share that policy with you guys in just a moment. And let me get out of this one for Jalen. Let's see if there was anything else I wanted to bring up. No, here. So let me close this one. All right. Oh, you know what? I wanted to show you guys one more thing here. Let me see if I can see if it was on Jordan's or Jalen's here. Let's see. No, I think it's on mine actually. Okay, let me actually stop sharing this one, and then I will get the other one up here. Okay. Add it to stage, and here we go. All right, so this is my policy. This is the one that I started back in, I think, June of 2025. You can see here, I had a lot of cash that I was able to. I was able to put in a large dump in, which is very beneficial to these policies if you are able to put in a large dump in because of the immediate cash value that's created. So in my case, you can see here in year 1, 47. So I'm in this year 1, about to go into year 2. My total premium was $111. That included a $75,000 dump in, along with my annual premium of $36,000. So as you see here, I have cash value available 9112. With our non-guarantees over around 92 that I can use immediately. I have not taken any loans from this. So this is the actual policy growth that's been happening just in this last year. So what I want to point out here is that my premium for next year is 36. And then my third year premium drops down to 31,137. And these, if we go across to the cash on cash value growth, we can see these numbers are now into the positive percentages. That means I'm flowing in dollar for dollar, 31 in, 32,615 out. So that's happening in year 3 from this net injection and that immediate 75,000 cash value I flowed into it. I do plan on using loans from this probably this next coming year. Why not? I'd rather be using and taking money from myself, borrowing from myself, so I can get ahead for the investments and things I want to do without that requirement of paying other people my interest and or depleting my own personal assets. So I'm excited to see how this policy grows over time. And you can see also my premiums will continue to decrease as I age. One, to allow the policy not to mech. In fact, if we scroll down here, by the time I'm 67, so retirement age, if I truly wanted to not put any more premium in, I can actually just pull out from the policy to pay the premium. So 21 years, 67 years old, I'll be flowing in 11,000 and I'll be able to pull out 11,418 from each one. So now I could take this and pay off my premiums there on out with still capitalized interest growing. So again, the value of these policies isn't so much how much you get started with, it's just getting started. And if you're worried about how, your age, or I don't have enough money or things like that, we just recommend getting on a call with us and let's work out the details. Let's strategize what options are available for you to get started. Because even if you aren't able to be the insured in these policies, we have a lot of other options for you to get started with policies that may not necessarily need you as the insured person. Let me just go back up here. So again, I am just thrilled to see this policy of mine not just working the way that I was told it would work, but just literally seeing it work for itself. And the access to the money, the control, and of course, the safety net of the death benefit if anything were to ever happen to me, my children would be set up. They wouldn't have to worry about a thing. And that was one of my biggest reasons for doing these policies, was to make sure that my children were protected if in the event of anything happening. And as well now my business. Now if something happens, there's money for my business to keep flowing, my family to be taken care of. But I'm not worried about that right now. I'm worried about working hard and continuing to cash flow into these policies, share my story with others, and encourage people to get their own policy started. Let me just go back over to this side. So I know I have a couple clients coming up that we met actually last week who are interested in the policies, even for their children. They're getting ready to go to college, or they're trying to figure out how they're going to pay for college for their children. This is the best tool out there if you are considering saving for your kids' college funds. There's other options out there for sure, but this one, what happens if your children decide not to go to school? Some of those other investments there to protect or to allow access to money for school may not be accessible if they don't decide to go to college. So here, now it's their own bank. You fund it, it grows. They can choose whatever they want to do with that money. Go to school, start a business, whatever it is. Hopefully using this money to deploy out and create more wealth for themselves, more income. All right, let me get out of this one real quick. So, okay, I want to see if I have any comments in here. So, oh, hi, Dexter. Nice to see you. I was so great to meet you on Sunday at the nonprofit event with Brianna Benford. So such a pleasure to meet all of you. Oh, sorry, I didn't see your comment of it being larger. My bad. Hi, Dave. How are you? Yes, having options and keeping funds in the family. That's what it's about, guys. It's keeping our money in our family. Why do we want to deploy it all out to everybody else and have all the money off of us? Keep it in your family no matter what. I love the fact that Brent loans his policy money out to his kids, whether they're buying cars, buying condos, buying boats, buying airplanes, whatever it is, he's loaning the money to them. They're paying him back with interest, because at the end of the day, it's all going to go back to them anyway. So well done, Brent Kessler, setting up your family. And I'm so grateful to be setting up my own family this way, as well as myself. So I hope many of you out there are looking at this and practicing this concept in your own financial picture. And you'll definitely see the very many benefits that the policies offer by getting started. So I know there's not many on today, but if there's any other questions or comments regarding these policies, I'm super happy to have shared these my policies with you guys and show how the growth works. If anyone was ever interested in talking one-on-one about it and talking about your own situation, please feel free to set up a consultation at your convenience. And so I don't have a whole lot of time today, guys. I've got another call that's going to come up in the next 10-15 minutes that I need to get ready for. But again, I appreciate you joining me today. And again, to Hannah Kessler for letting me come on her live show on Thursdays. It's been fun. Hopefully I'm getting a little bit better. This is all new for me, but I really like it and look forward to joining y'all again. So thank you so much, Dave. Have a wonderful day. Dex, thank you again for joining me. And until next time, guys, have a wonderful day. Take care. Bye-bye.